Hi there, everyone. We are going to give it 1 minute since we know that people are registering as they come on. And I'm just going to give it 1 more minute, let everyone get in. And this is being recorded. Okay, we can go ahead and get started. And as people are joining in, they'll probably be in the middle of the introduction phase because I see a lot of people popping in as we're speaking. But good morning, good afternoon, depending on what part of the world that you are in. My name is Lucas Doub, and this is a virtual panel hosted by ZMH Advisors. We're hoping to do more of these in the future. This will be our first of hopefully plenty more. And just, for way of disclosure, today these are strictly opinions. Take them as you want. But these are the opinions of us and our host and or our panelists, but in no way are they straight facts or should be taken as such. So I'm going to go ahead. I'm joined by Jurgita and Willa, and I'm going to let you guys introduce yourselves and your organization and what you do before we get started. So Willa, why don't you start us off, and then we'll go from there.
Great, sure. Thanks, everyone, for joining. I'm Willa McManmon. I'm Managing Director at the Blueshirt Group. We're an IR, capital markets, and financial media advisory firm. We've done more tech IPOs and SPACs than any other firm. We've got over 100 public and dozens of private clients. I myself have been in IR for 25 years, which is always painful to say, but primarily as an in-house IRO from companies spanning pre-IPO to mid-cap to Cisco. Today is actually my 2-year anniversary at Blueshirt, and my practice is primarily SaaS, so my ESG perspective focuses mostly on the early stages of ESG. And with that, I'll turn it over to Jurgita.
Hi all, thank you for having me here, and hi everybody. I am Jurgita Ashley. I'm co-chair of our firm's public companies group and co-chair of our ESG collaborative. I'm a partner of Thompson Hine. It's all business law firm headquartered in Cleveland, Ohio, and they work with companies on developing their ESG programs as well as disclosures and just general securities compliance and capital markets raising activities. So Lucas, with that, back to you.
Great, thank you. And my name is Lucas Doub. I am helping out with partnerships and go-to-market strategy and development for ZMH Advisors. My background has been primarily in the investor relations world on the vendor side. I worked at NASDAQ for a number of years where I developed our agency and partner program there. And then in turn, the last few years has really been focused on ESG, where I have advised public companies, particularly on the smaller side, how to message and how to communicate their ESG efforts and how to get started. Also specialize in working with the nonprofit world on as they shift into this new world of how they can align what they do and when they're working with corporations to help those corporations report what's actually where their money is going and what they're doing and helping with. But for today, I've started working with ZMH Advisors because I saw they solved a big issue that I was having out there in terms of actually qualifying, ESG-centric investors and finding and doing research on that end. I really think it's a dynamite product, and I'm really excited to be a part of this group and do stuff like this in the future, because I do think ZMH has a lot of great information they can bring to it, and a lot of contacts like Willa and Jurgita that we can help bring to the public and give knowledge to. So for today's, virtual panel, what we want to focus on, there's a million ESG panels out there. There's been a lot of talking. There's a lot of different things. And what we really wanted to focus in on was the role of the investor relations professional when it comes to ESG. And what we've seen out there is a lot of organizations have sustainability folks, they have social impact folks, they have ESG folks, they have their lawyers, they have PR, they have everything else. And this is really where, what does the IRO's role in all of this actually is, and how do they work with those folks and do that? Certainly some of the topics we're going to talk about today, we could probably have our own virtual panel on that we could spend an hour or two talking about. So we might brief over them a bit, but it's really with the mindset of talking about the IRO's role in all this and what they're doing. And so I'll go ahead and get it started right off. And what we can talk about is really today, what is the current role of an investor relations professional when it comes to ESG? Is it more doing research? Are they coaching, doing executive coaching, more storytelling? Is it outreach to ESG-centric investors? Where does their role really come in? And I will let Jurgita take it from here, and then Willa can respond as well.
Yeah, I'll keep it brief because I feel like Willa will have more substance to add to this one. But from what I see with working with public company clients, it's a little bit of everything. And I think shareholder engagement these days, a lot of times centers around ESG. For some companies, it's almost solely ESG related. And investor relations professional is somebody who is quarterbacking those efforts and playing a very central role to that. But in addition to it, I think there is a little bit of, in some ways, it's a unique role in the company that's very well connected with C-suite, with other departments within the company. So it can play an important role in sort of advancing the ESG program forward and making sure that there is buy-in for various initiatives and things that the company wants to do, and also for ensuring consistency against, this is from the legal standpoint, of course, I can see Lucas is laughing, but it's for ensuring consistency of ESG disclosures across various forums, like, whether you're putting them in your public filings or press releases or sustainability reports, it's the same SEC rules that apply. It's the same sort of greenwashing concerns that you would have.
Yeah, and I would add to that, I think that IR often gets thrown ESG because, again, I do a lot of early stage companies, they've just gone public, there's a lot on their plates, and they're not really sure how to deal with ESG. So legal and IR kind of get thrown ESG, but it really, I think, is important for an IRO to immediately establish a cross-functional team to work on ESG, because it does touch every facet of the company, and it's a heavy lift. So my recommendation is always to sort of get that team going, set up maybe a junior person as the project manager to talk about what are our short-term goals, kind of break it into bite-sized chunks. Think about our peers who are doing it really well. Think about, get your hands around the rankings and where you stand, and then think about how you do a gap analysis. Work with someone like ZMH. I think consultants are really important actually in this effort, and I'm not just saying that to kind of promote you guys, but because it is such a broad-based effort. And with younger companies, I think, it's kind of deciding, are we going to do a full-blown effort? Are we going to sort of just start working it into our earnings calls, into our Ks and Qs? Or are we going to, really try to put together an impact report? So I think the role of the IRO is really sort of the quarterback, but you really have to get that C-level buy-in. And that's where I think, to your point, Jurgita, the IRO has kind of a unique perspective in enabling to say, hey, look, if we want BlackRock to invest, or if we want, Neuberger Berman, or we want ARC, we really need to understand where we sit in this ESG universe and how we're going to respond.
Yeah, absolutely. Making sure you know the drivers, right? Like why are you doing it? Like one thing that I often get is a phone call where the company says, "Can you please prepare an ESG policy?" Well, it's not a policy. It's like really identifying the issues that are the most important to your company, and it's different issues depending on the company, and also like building out the program and building out data collection and the control mechanisms and knowing why you're doing it, because it will take time and there will be cost involved with all of it.
Yeah, when I started doing this a couple of years ago, with IR firms, we were confused because I was fairly new to it and I was coming on board. Was basically, a company, we would say, yeah, we have an ESG program or capability. Like, great, we need to have a 100-page ESG report. We need to know what our carbon footprint is. We need to know, all these things we need to do. And basically, I'm like, well, we're an IR firm. We just need to find people that will do that for you
Right.
and do those things, and then communicate it to the investor world, which could get very costly. And there was a lot of confusion on, where do we end and others begin? And then we would basically be forced to work with people that we might have seen as competitors in the past, or things like that, because we would have other ESG centric firms saying that they could do IR. So we're trying to connect those dots of people we could work with and do and so forth. So I could see where the organization could get confused where they're starting out on this. And I think they just need to know the actual role of that IR person and what they do. And I think it's really strictly to be focused on the ESG centric investors and that investment world and so forth, but it still needs a great knowledge base of what's out there, who's out there, and what they need to be doing based on their size and so forth, and be able to speak to that. And I'm sure you all have seen the same.
Absolutely. And I think an analogy is, in writing an S1, every company has to do that. And it couldn't be just an IR person writing an S1. It's every single, C-level executive has to be deeply engaged in that process. And that's written in the language of finance. So ESG is sort of a further to that, and it's really written across, all these ESG elements. And so in order to do that well, you need to really understand kind of where you sit culturally as a company and what your outcome, what outcome do you want? Do you want these ESG investors, and which of those investors? So you sort of start at Z and then work back to figure out how you get to kind of the rankings, and what kind of communication and narrative do you weave into your investor materials so that these folks are going to look at you and want to invest in you. And I think too, there's a, and you can talk to this probably, Lucas, there's a premium on ESG companies that do it well. So being able to communicate that to your CEO and CFO so that they understand that there is, the outcome for the company is that you're going to have a premium versus your competitors if you do this right.
Yeah, and I think that's really, when I look at some of the, like what ZMH is trying to do and so forth, what was helpful was that there's a lot of products and services out there, but all of them were like an ESG add-on, but I still wasn't able to like narrow down and see the investment community, what the ones that were actually focused on and what they were saying from a targeting perspective and so forth. And I think as we evolve, hopefully that will get better and better. And that was a frustration that I would run into on my end. But you talked about the ratings firms, and ratings is always what people talk about ESG. I mean, that was like, when I was doing this a year or two ago, the very first conversation I had, it was, what's our ranking? What's going on with that? Well, there's 15 plus ranking agencies out there. So when it comes to the IRO, do you think that they should be the ones filling out those questionnaires, or should they be focused on those ratings at all? Is there a particular ratings agency that you think IRO should be, compared out there? I mean, what do you think about rankings when it comes to the investor relations workflow?
Yeah, Jurgita, I'd love your legal perspective on that, and then I can give you sort of my internal perspective.
Sure. So maybe stepping back just for a second. So there are lots of acronyms around, right? So there are really two groups: ESG frameworks and then ESG rankings, right? So the ESG frameworks, those are your SASBs, TCFDs, GRIs, basically guidebooks that describe what it is that you disclose. And then the ranking organizations that assign you scores for what it is that you disclose, basically. So we think from the legal standpoint, and probably just value driving standpoint, we always say that you can't focus you can't focus your ESG program specifically to achieve a certain ranking with a certain organization. It really has to be something that's a little bit more fulsome, that's developed to drive value long term, which goes back to identifying those ESG topics that are in fact the most important to your company, and then focusing on those. Now, that's not to say that ESG rankings are not important, right? The Sustainalytics, MSCI, ISS, others, but those three are probably, in my world, are emerging as the most important ones. So you should definitely be aware what it is that they say, because it will impact what the board of directors thinks, how the investors perceive the company. It will drive some of the investment decisions. But then, and then making sure that those rankings are being based on the accurate information. So a lot of times when you look at them, and for example, CMH and others could help out with sort of increasing those rankings, right? But a lot of times they're based on information that's inaccurate about the company, and you're just not getting points that are easy to get. And other times it's like very easy tweaks that you can make and increase your score quite substantially.
Yes, I totally agree with that. When, in-house, I was at Trimble Navigation for 10 years. And so we were a hybrid software hardware company. So there was a lot more of sort of carbon footprint and, where are you getting your materials and, where are you operating? So definitely MCSI, it's a little bit of a pay to play, which is a bit frustrating. So ISS in particular, you're getting ranked by someone who's then also getting payments from investors for their services. So it's a little bit tricky, but MCSI in particular, I think it's very easy. They will send you as an IRO where you sit in the rankings, and you can look and see if it says your board structure, you're getting dinged because your board structure is, not what it should be, but you actually have the board structure. You can then revert and tell them that, these facts are true. You've missed this. So you do have some low-hanging fruit that you can work on to get that ranking up. In terms of whether that should guide your ESG strategy, I don't think that's the right way to go. If you look at someone like a Cisco, they have an entire organization just focused on ESG, and they have a very high ESG ranking. But again, it's a lot of resources. So I think over rotating, if you're a small to mid-sized company on the rankings, is probably not the right strategy.
And a lot of times they're also inconsistent, right? You'll have major rankings come out and your score varies quite widely. So it's also about setting expectations or up at the leadership level about what to expect and not expect as it goes to those rankings. I think one of the reasons why Sustainalytics is popping up a lot is because you go to Yahoo Finance, right? And there is a Sustainalytics rankings right there, so everybody's aware of it. So again, Willa, you made a good point, like some of those are a little bit pay to play type of thing, but there is some work on the disclosure standpoint too that could be done. And then another one, this one is not IRR related so much, but it's for the suppliers and even for private companies. EcoVadis is a very important one because a lot of public companies will push that down and will require their suppliers to provide that information that way. So that's another one to keep on your radar.
Yeah, and I'd say too that interestingly with ESG, and because I work mostly with SaaS companies and we don't have the carbon footprint and those kinds of, we do to a very small extent, but more and more there's sort of the law of unintended consequences, like an OpenAI, for instance, or a Twitter, and I guess, Jurgita, I'm just asking a question, how are they taking that into consideration in ESG? Is that part of the process now?
Well, it's interesting, right? Because with what's happening with the SEC's proposal and the EU on the climate change disclosures, we are almost at the point where it's difficult to conclude that any company can get away without talking about emissions or the climate change. So it has to be on your radar. But that's not to say that for the professional services firm or tech firm or something like that, these human capital issues will not be top issues or priority issues that should be focused on. And I think we chatted a little bit earlier, but at some companies, the sustainability is set up very well because companies were already at it for years. They're doing a lot, they have data. But as far as the human rights or running human rights through the supply chain, or even in some cases, some like talent management programs, they could use some work or like somebody to push that agenda forward.
Yep. Makes sense.
Yeah, and I believe in the term, data-driven storytelling. And I mean, that's what ESG is a lot. And what I've encouraged clients that I've spoken to in the past is when we run into those situations, let's still have a great story. Like let's craft what the story is, and then the ranking will come. And let's just make sure that we're really expanding upon some of the things you do. And what I discovered was that a lot of companies were doing stuff in their communities or doing stuff for their employees, and they weren't even reporting that because they just thought that was a part of way of doing business. So they weren't even letting that information be known publicly because that was just the way they did business for years. And I'm like, well, let's let the world know that's what you're doing. Let's start putting that in there. Some of the things, either a recycling effort internally or a community engagement you have with a nonprofit, or, a nice thing that you have going on with your employees for their children or something like that. And so, I think it's the more information that an organization can put out there about themselves, even if they're not filling out the actual questionnaire or something like that, the better. Because if the ranking isn't where they want it to be, you can still point to a whole slew of information that somebody can look at and see that this organization does care about certain different things and is focused on that. But yeah, I do think it's an interesting dynamic.
Sorry to interrupt, but it's a great point what you say. Like we find a lot of times that companies are doing much more than they think that they're doing, but sometimes Department X is not aware of what Department Y is doing. And then once you pull all of that together, there is already oversight of these certain issues and there is already data. So it's about putting it all together and sort of making it, Lucas, as you said, more data driven. Because I don't know, 5-7 years ago, the sustainability reports were sometimes storytelling, like nice community stories. Right now, it's much more about the financial impact and metrics and data. And even from what the investors and the rating agencies look for, I think is shifting a little bit, because not that long ago, it was as long as you had the disclosure out there that automatically resulted in better scores and everything else. Now it's shifting a little bit more to like showing impact and progress as well.
I think, and that's where I was saying the analogy to the S1. I think if no one's asking the question, sometimes nobody knows the answer. Somebody knows the answer, but you don't know who knows the answer. So until the question is asked, the organization doesn't have a full awareness. So asking those questions, and then where there are gaps, then you now know there are gaps and we've got to get somebody working on this, or actually that we can check that box and bring that to light. So I think that's both of you have great points.
Yeah, and we talked, you hit on this a little bit, Will, and we talked about it, obviously previously, is I think a lot of companies are still, and it's changed quite a bit in almost a year, but a lot of companies still think that ESG is a lot about the E. And and I think we're going to say the big bad word of Elon Musk, but last year he made a big stink about ESG because his rating got lowered, and it's simply because he didn't realize that the S was just as important as the E. And yes, he's created some really nice electric vehicles, and that's great. But if their employees are treated poorly or you're having issues on that end, that can be just an effect, and vice versa. If you have done great things on the S side, really make sure you hone in on that as well. And I think a lot of companies forget about that.
That's right.
And same on G. I mean, you can have an energy company that does really great things on S and the G that will drive pretty good scores.
Great, yeah. So when we're thinking about the workflow of an investor relations professional and they are doing research on their side and preparing, what type of tools, what should they be looking for, things that they should be doing? And I always look at it from the viewpoint of prepping that they're going to have to train their executives. And I always think about these investor conferences and the situation that you might have come up with where they get asked questions and so forth. So what tools, Willa, during your workflow, what is it that you're using to research and look at? We talked about ratings firms. What else is out there? And Jurgita, anything else that you might think that could help as well?
Yeah, well, and again, not as an advertisement, but we do work with CMH because it's really hard. You said very early on in the conversation, it's hard as an IR firm to, it's hard to target still. ESG it's a little bit nebulous. So having somebody who's actually got a database that understands which investors are investing on what criteria is important. I think though for the IRR, the first thing to do is to look at those rankings and just understand where you sit. And then to look at what investors you'd like to have outside of ESG, and then sort of map the two together. So, knowing, like I said, a Bailey Gifford, for example, they're incredibly ESG driven. They won't invest in you if you don't meet their criteria. So understanding what that criteria is and how you can weave that into your investor relations presentation, how you weave it into your scripts, again, into your earnings calls, eventually into your filings. I think the first step though is getting that team in place and really understanding what your objectives are, who is the investor targets you'd like. And I think that comes from working with advisors. And then, again, bite-sized chunks because it is a big effort, but I don't think it's something you can say tomorrow, I want to go on an ESG roadshow. You're probably not going to be prepared unless you've gone through, several iterations of how you're going to do that. I wouldn't advise, I guess, saying, my objective is to go on an ESG roadshow. That should be an outcome of the work that you do to establish your ESG program.
Yeah, and that's beautifully said. I was going to say, you want to look at your investor base and identify who are your major investors, and as well as you mentioned, the investors that you want to be investing in your company, right? Future investors, and then looking at their sort of ESG expectations and then making sure that that can be covered. And I guess the way I think about ESG investor engagement is a year-round effort. So if you wait until the time that there is a shareholder proposal on some sort of climate disclosure or social topic, you don't want to be in the position where that's when you're starting those conversations. And it's different issues that are important to different investors. So the institutional investors large institutional investors think about ESG differently than certain other shareholders who might be more focused on specific topics. So it's also about tracking your industry and seeing what has been happening on your industry, what are the industry trends on proposals, disclosures, etc. And I will echo that bringing the right team to the investor meeting on ESG issues is important, and also prepping that team, setting the expectation. So again, not to pitch CMH too much, but they do have a very nice tool where they sort of have sampling of the investor questions, and that has been helpful in the past, just sort of like putting the team together in the same room and just walking through the questions that can be expected. And then everybody sort of feels more comfortable with the process as well.
Yeah, I mean, you brought up roadshows, and which was going to be my next point. When we think about an ESG roadshow, I think it'd be helpful for our audience to know what exactly is that? Is that an IR driven, the same as like you do a roadshow before an IPO, or you're doing a cap raise and ESG is a component of that, or is that strictly an ESG driven event that goes on that you're going out? I think it'd be helpful to just kind of know what an ESG roadshow is and what that entails.
Yeah, so it would be a non-deal roadshow where you would specifically target investors who are interested in ESG and assumably interested in your ESG profile. So it is a little bit different in that it's, there isn't, it's not every investor that cares about ESG, unfortunately. There is a set of investors, and mostly large investors, although, Neuberger or Berman, who's a big firm, but not compared to a Fidelity or T. Rowe, is someone who would be very, very interested in that. And then within these larger funds, or within these larger asset managers, you've got funds that are specific to ESG. So, if you go again to a Fidelity, which manages, I don't know, $7 trillion or something, literally, you've got so many different funds, you would go specifically to that ESG fund so that, knowing that your profile is going to be something they're interested in. And so that these tend to be funds that hold longer, long only funds, which for an IRO is really important. So you want funds that have the assets to invest in a big way. You want funds that are going to stay long. You want funds that are going to take time to understand your business. And I'd say that, today, the European funds are way ahead in terms of ESG. And I think, Jurgita, you probably know this. I think in general, ESG really started in Europe. And so we're sort of playing catch up here in the US. And I'd love your perspective on that.
Yeah, absolutely. And EU funds are already subject to some regulatory requirements that then get pushed through into every public company where they have investments. So that's one of the drivers why these ESG programs are growing and sort of developing based on just much more detail, much more granular than they used to be in the past. And then I think going back to the roadshows for a minute, it's a roadshow, right? So even though it's ESG, so from the legal standpoint, there are some of those same considerations. You want to think about is there anything material? Do we have sort of selective material, non-public information disclosure issues? And also having like some bullet points about what it is that the team expects to talk about. A lot of times the answer will be no, and a lot of times the information will already be public. It will be just synthesized in a different way, but that's something to keep on the checklist if you are spearheading that process. And also disclaimers. Just because it's not a filing doesn't mean that we don't have sort of greenwashing issues or potential liability issues.
Yeah.
On that bright note, back to you, Lucas.
Yeah, so obviously we could have a whole conversation about the new SEC guidelines coming out and what that means and so forth, but from the perspective of investor relations and that workflow and so forth, are we going to end up seeing, is this going to be something that's going to fall into the hands of the IR professional, or is it going to be the way that we see a lot of times with 8Ks and the Qs and so forth, where the controller and law firm is really the ones that ultimately end up submitting, but the IR person is helping report some of the numbers and some of the things that are going to go into that report. I mean, how do we see that workflow? And then if we get into a little bit exactly, I know a lot of people have, but a lot of people haven't, what those guidelines actually are and what they should be advising their clients or their companies of what's coming down the map based on the size of the company.
I can take the first,
go ahead, please.
I can take the first part and then I'll hand it over to Jurgita, because I honestly don't know exactly what those SEC requirements are looking like right now. But I do know that anytime you're doing reporting, I think in a more mature IR program, you're always going to be part of that, the Ks and the Qs and the reporting, because you want to make sure, finance is sort of, they're giving input, but they're not necessarily aware of the broader ecosystem. So you want to make sure that you're getting that narrative woven into whatever it is their output is. But I think it's going to be driven by legal, and then IR is going to give perspective, and then the controller is, the one who's ultimately having to incorporate it into the filings, or the SEC reporting manager.
I agree with that 100%. So it's definitely going to be a team effort, I think. So the proposed rule basically provides a bunch of narrative disclosures, climate related and physical and transitional climate risks. Then there is a significant piece that would fall into the notes to the financial statements and the financial statements themselves. And that it's a difficult piece, and we'll see how that sort of plays out when the final rules adopted. We have all heard about scope 1, scope 2 for some companies, potentially scope 3 as well, and then some governance requirements, some governance disclosure requirements, and also there is an important piece that relates to that I think ultimately relates how companies will go about setting their net zero and other ESG targets, making sure that there is already data to support those targets, and then being ready to show progress against those targets and public SEC disclosures. So, with all of that, the financial piece will obviously be in the controller sort of finance team's office. Legal will have to be heavily involved, but it's not legal, right, per se, because there are lots of elements with the ESG where there is input needed from other parts of the organization, and I think that's where IRO can be really, really helpful driving that, and also going back to ensuring consistent messaging out of the organization and whichever form those ESG disclosures appear at. And Lucas, to your other questions about what are companies doing right now, well, it's all over the board as expected, right? So some companies are already drafting sort of mock disclosures that could be provided in response to the proposed rule. Many others are waiting for the rule to come out before they really sort of make a significant investment in that. Many fall in the middle that have done a gap assessment to see what they already have and what would be major pain points when the new rule comes out. But I guess my main takeaway from that would be is if your company is public, whether or not that the SEC's rule will come out anytime soon, it's scheduled for April right now, or what it's going to look like, every company will need an ESG program. So sort of starting to think about primary steps in establishing that would be an important thing to do right now.
So are those scopes based on industry or company size or both?
So scope 1 and scope 2 would be required for all companies. So scope 2 is your direct emissions. Scope 2 are basically your purchased energy. And then scope 3, that's a major pain point, and that would be required for larger public companies that if scope 3 is material to them, and we can have a whole other webinar about what it is that's considered material. It's for many companies it is material because scope 3 is your customers' emissions and your supplier emissions, and that's again, like whether or not the SEC's final rule will include scope 3. Scope 3 is important because International Sustainability Standards Board will include scope 3. European regulators are including scope 3. And what scope 3 means is that if the public company is required to report suppliers' emissions, and you're a small private company and you're providing services to that public company, you'll probably need to measure your emissions and have that data verified so you can push that up in order to keep contracts. So there is a direct financial implication there too. We had some large private companies earlier in the year that they will not be subject to the SEC's rule, but they sort of wanted to prep and do the gap assessments to make sure that they're ready when they ask for that information.
Interesting. Thank you.
Yeah, I wrote a blog last year about the scope 3 opportunity, and that may be an opportunity for some IROs and PR teams for smaller companies that are sustainable and that are doing the right thing to present themselves as an option, as a potential, vendor or partner for larger organizations who are looking to improve their scope 3 data. And so while people are maybe look at some of this as burdensome or worried about it, scope 3 might present an opportunity to other organizations who are doing B2B type business to present themselves as an option, and that would almost give them an advantage over people who might have lower ratings than they would. So one thing to think about.
Yeah, and to add to that, we have seen companies that sort of really took the ESG strategy to heart and invested heavily in sort of research and development on ESG related issues, and have come out with whole new lines of business and a lot of significant revenue coming out of that as well. So it's a risk and it's sort of governance and management and disclosure, but it's also business opportunity too, whether it's a new line of business or it's cost cutting or like tailoring your product so that it's more appealing to the ESG conscious consumers.
That's a great point.
Yeah, great points all around. It will be interesting to see what it'll look like in 2 years. So, unless you're not on LinkedIn like I am every single day or watching the news, it's hard to not notice that in the last week or two, we have seen a high number of layoffs. And certainly coming from some of the inflation issues that we've had, the economy just slowing down a bit. I think coming out of the pandemic or during the pandemic, there was a lot of overhiring in certain areas, and we're seeing some correcting on that sense. But unfortunately, layoffs, and those are people's lives and jobs and that are being affected. The first question I would have is, do we see the way that a company handles the layoff being incorporated in ESG? And I mean that by, we have seen in the last few months, a CEO on LinkedIn crying after he laid off a bunch of people, which was looked terrible. And then in the past week, we saw a CEO quote a civil rights leader during her layoff email to employees, which was also taken poorly. I don't know if I've seen one example yet of a layoff that was done where people were like, that's the way it should be done. I don't know if there's a great way to do it, but do we see this becoming a factor with people who are monitoring ESG and the way they're going to look at organizations?
I can take that because it hits square in the center of our client base. I think I don't have a single client that isn't in this situation. And what I would say for founder-led companies is it hits the founders hard, and it's a really hard thing for them. And I think that there was a frenzy of overhiring. And so there is sort of, again, the law of unintended consequences, where they're sitting there with a bunch of people that they really think are good quality people, but they're in a situation where, Wall Street's focused on profitability. So they have to communicate somehow. And I don't know that to your point, that anyone's figured out the right answer. But I do think there's a less bad answer. So I don't know that ESG will be directly, in terms of rankings, but I think certainly there is a much bigger focus because of the S in ESG on the way that companies treat their employees. So I don't know, Jurgita, from a legal standpoint, if that you think that would feed directly into the SEC. I think it's more of a, how do people perceive the company?
All great points. I really love what you said, but from the SEC, I think we will see additional rules about sort of talent management and disclosures, and it will, or expected to include like workforce turnover rates, among other things. So but just from companies' longevity standpoint or profitability standpoint, I mean, I think we all agree that companies should invest in people, and this is one of the considerations to think about. And then also, it's a good example of why ESG programs have to be agile, because these ESG issues are evolving over time. Just within like the last 12 months, we saw abortion-related issues, layoff-related issues. We saw the supply chain and logistics and what came out of the whole Russia-Ukraine war. So it's really having that quarterback and making sure that running all the recent developments through the ESG lenses to that same cross-functional group and thinking about that and thinking Ontario will be somebody who's sort of in charge of messaging around these issues and sort of escalating them as well.
Yeah. So, again, this is another topic that could probably be its own virtual panel, and we'll probably not do it service, but we'd be remiss if we did not talk about some of the anti-ESG movement that's happened in the past few months on the political spectrum. I think people can do their own research out there. There's plenty of stats showing that it's kind of a little bit more lip service than anything. When you see what BlackRock said, it's pretty, not affecting them at all. And some of the funds and things like that we've seen have actually outperformed the non-ESG funds, and there's a lot of stats and data on that. But it certainly is a narrative. I think most concerning to me was the letter that a few US senators sent to law firms around the country, basically threatening them if they were to advise their clients on this and so forth. So I guess my question first, and again, I'm thinking through the lens of one of my favorite parts of the ZMH's product is the ability to see the questions that might come to your executive when they're out there. And let's say you have an organization that's bought in from an ESG perspective, the IR team, PR teams, but you've got an executive who might be part of this anti-ESG group or just at least skeptical. How do you navigate that when you're trying to get them in front of these investors and talking about this, and making sure that they stay on board with what's going on?
Well, I've been in that situation. So I think that goes back to your point, Lucas, about you just have to have the stats and the facts. And, the type of investors that are bought into ESG are the type of investors that are also generally long-term. And, the size of these investors in many cases is very large. So I think you have to go in, number one, with some stats, and then number two, a little bit of peer pressure. So again, back to, there are folks that do this really, really well, and they're often performing very well in the markets. And so I find that, coming in with, sort of taking the political out of it, because it is very politicized at this point, and just giving sort of the stats and the facts is the only way that you can address it. And I don't think it doesn't pay, there's no way to get in sort of a philosophical argument about it, because I don't know that there's any winning on either side, but just the statistics around ESG investors. And that's where, again, you guys can come in and give good advice.
And we have used the same, like you say, the statistics and then also peer comparisons and market comparisons.
Yeah.
Yeah, I mean, I think, I've had in-laws and family who ask about what it is I do for a living, and what I explain to them is red, blue, money is green. And
yeah, that's right.
It doesn't really matter. I basically say ESG, in my opinion, was basically a compromise in a lot of ways. It was, it's not, Greta Thunberg, going and protesting at things like that, but it's also saying there just needs to be some accountability here, and this is how we can make money at the same time while trying to make sure we fix things. And to me, it was a compromise. I think maybe some of the movement that we're seeing now is a little bit more lip service than anything. I don't know if there's any tangible effects of it that we've seen so far. But as far as when I've worked with executives in the past, I've presented stats and things like that as well, but also just made sure that they're prepared for the questions that were going to come, because no one wants to look dumb, right? I mean, no one wants to look flat-footed in front of a group of people. And so just making sure they're prepared with the questions that might come, and that they have an answer, because I'm like, you don't want to look silly in front of them, because they're going to think you look silly. Yeah. So, just having that tough conversation.
Well, and I think back to the Ukraine, Jurgita, like those questions were really top of mind for investors last spring, and who could have seen that coming? But, initially, if you weren't ready for understanding where your position was there and what the impact on your revenue was, investors kind of thought maybe you didn't have a great handle on your business.
Yeah, great point. And it wasn't easy to do, right? Like even the decision was to pull out. It wasn't something that could have happened overnight.
Right. Yep.
So, our final question from me, and then, we can certainly take questions from the audience. If you have one, you put it in the Q&A and I'll see it. I always like to ask, like, where do we see this 2 years from now, 5 years from now, 10 years from now? And I think we always talk about Europe seems to be quite a bit ahead of the United States in terms of, I had a person tell me one time that worked in Europe, and they said, this isn't even like it's just part of our strategy. We don't even look at it as like, maybe we should consider it, or what are we going to do? It's just part of what the workflow is that ESG is included. So I'm curious to see, here in the United States and beyond, what we think year 2, year 5, year 10, what this looks like ESG and where we see it going.
I'm going to have you start on that one. So.
All right. So I definitely don't think that ESG is going away, right? I do think that anti-ESG movement will spread, but it doesn't mean that ESG is going to go away, because ultimately ESG is about focusing on the topics that are important to the company and basically focusing on the issues that should be set up to drive long-term shareholder value creation. And Lucas, I like that you brought up Europe, because we definitely look at what's happening in Europe to ESG to sort of guide what we think will happen in the US. So for example, now we already have corporate sustainability directive in Europe that will be impacting some large US companies as well, or US companies that have presence in Europe. It will eventually get pushed down to other companies, and we do think that other countries will sort of drive inspiration from Europe, or International Sustainability Standards Board will drive some inspiration from Europe. In Europe, in the US, the focus has been climate change and social issues, at least as far as the diversity, equity, and inclusion, right? I think a lot of companies have well-developed programs on diversity, equity, and inclusion. But in Europe, the spectrum is much, much broader. It's also about like making sure that things run through your supply chain. And it's not that you just reporting risks or the disclosures, but you're making sure that sustainability and the human rights, that there is an actual impact, that you're making a difference down those supply chains. There are other topics, natural resources, biodiversity. So it's sort of looking at you, tracking your developments, looking at your investors, looking what's happening around the world, and sort of trying to predict what it is that you will have to report on a year or 2 years or 3 years from now. And I was having this conversation with another client recently, and I think for many the concern is not what they already require to report now, because we can go and build programs and the data collection systems for that, but it's thinking about what's coming, what's a year, 2 years, 3 years from now.
I don't have anything to add to that, other than to say, I think, and this goes back to your disclaimer at the beginning, Lucas, but I think there is a direct correlation between the maturity of the company and the maturity of their ESG program, which is part of what gives investors comfort and confidence in the company's ability to sort of achieve what they say they're going to achieve.
And we have seen recognition on that as well. So take, for example, life science companies, right? A company that's pre-revenue, that's working on one specific product. I think the investors understand that there are different expectations there than somebody who is a well-developed company that's global, that sells its medicines all around the world.
Right, and there's a risk profile attached to that as well.
Yeah, I mean, the way I look at it is that, you look at what happened in November, and you continually see the issues that those under 30 currently care about versus those over 60. And as we move forward, a big set of the population, unfortunately, will be leaving this planet, or whatever, and there will be new, the currently under 30 will someday be in charge. and it's pretty clear what's driving their decisions and what's doing, and they're not letting go of that. And so I do think no matter where a company lies on it or what they think, if they want to be around for a while and they want to continue to get consumers and that age group, this is going to be important factors. And so I think it will be, I don't think it's going anywhere. It may have different names and things that are going on, but I certainly think that just looking at the youth vote and what they're doing, it's going to be a big deal.
And that's not to harp on legal issues too much, but I feel obligated to mention.
Of course you do. Yes.
But I think we will see a lot more greenwashing litigation and a lot more regulatory actions from all kinds of government agencies based on these greenwashing allegations. So I do think that sort of not overstating what the company does is very important, and making sure that sort of left arm and right arm are not saying different things. For example, there have been some things reported in the news, right, where business folks submitted disclosures to the government agencies making certain representations, and then the ESG reports it's something different altogether. So it's that coordination is important, and the ESG data and sort of tracking what the legal requirements are, but also what the Federal Trade Commission comes out with. It's in the process of updating its green guides, goes to recyclability claims and other things. Like it's a lot to manage, but I guess for the investor relations professional, legal review is important, whether it's on the press release or presentation. It doesn't have to be in a SEC filing.
Yeah, I agree. So we're coming up on the hour. I'm going to let both of y'all just give a brief promo for your organization and what you guys are doing, and where people can find a website name or anything like that. And then I'll end it with ours. And I think that's right on the hour, which is perfect.
Willa, why don't you go first?
Okay, sure. Yeah. So again, I'm with the Blueshirt Group, and we're an advisory firm. We do a lot of IPOs, SPACs. Again, work with 100 or so companies in the aftermarket to help bolster. Generally, they have in-house IR, so we're a strategic arm, and we also do financial PR within another group in the company. So we're always here if anyone's looking for help with investors.
And I'm a partner with Thompson Hine. It's a business law firm. I work with public companies. I also work with investors in public companies, and that's on capital raising activities, SEC disclosures, board, corporate governance, and ESG work. So can help with ESG disclosures, building out programs, sort of thinking about how to simplify these things, or what's coming up. So Lucas, back to you with that.
You're great. And I appreciate everyone attending. If you would like more information on ZMH Advisors, it's an AI-driven product and dashboard that's helping the investor relations officer or other folks who are involved with this actually see data behind some of these ESG topics that we talked about today, and it helps their workflow quite a bit. I got involved with it because it was helping. I saw a problem that I had out there when I was working, and so I'm very excited to be a part of ZMH. We're hoping to do this more and more in the future, and have lots of other topics we will talk about and things we will do, and getting our name out there. But I really want to thank you two both for being the first ones that do this with us. And I think it was a great conversation. It will be recorded, so we'll be able to give that out to people and let them see it if they weren't have a chance to attend today. We would like to thank everyone who attended, and if you have any questions, you can find us on LinkedIn and other places, and we will certainly get back to you.
Great, thanks Lucas, and thanks for having me.
Thank you all so much. Thank you, everyone.